What's going on, everyone? It's Elshan, and listen, in the world of trading, knowledge is power. The more you understand the markets, the better your decisions will be. And that's what we're all about today, making you a better, more informed trader. We're diving deep into the world of candlestick patterns. These are visual cues that can give us clues about where a stock might be headed. Think of it like this: candlestick patterns are like road signs for traders. Just like a stop sign tells you to halt, certain candlestick patterns can signal a potential shift in the market. We'll break down the most common and powerful ones, so you can spot them like a pro and potentially get an edge in your trading. First up, we've got the hammer. Now imagine a stock has been on a downtrend, kind of like when you drop your phone and watch it plummet towards the sidewalk. You see red, it's going down, and then bam, you get this little green candlestick that looks just like its name, a hammer. This little guy is telling us that even though sellers were in control for most of the day, buyers swooped in towards the end and drove the price back up. That long bottom wick, that's the sign of buyers flexing their muscles. It's like they're saying, hold on, we're not done with this stock yet. Now, a single hammer doesn't guarantee a full-blown reversal, but it's definitely a sign that the selling pressure might be easing up. Keep your eyes peeled for confirmation, like a strong green candle following the hammer. All right, next up is the bullish engulfing pattern. And this one is all about a battle between buyers and sellers. Picture this. You've got a small red candle showing that sellers were in control, at least for that day. But then the next day, a big green candle comes along and completely swallows up the previous red candle. It's like the buyers showed up with reinforcements and just took over. This is a strong signal that the bulls are back in charge and could push the price higher. Remember, the bigger that green candle, the more significant the potential reversal. So if you're looking for a sign that a downtrend might be coming to an end, keep an eye out for this bullish takeover. Now let's talk about the morning star pattern. It's all about hope after a period of darkness. Imagine you've got a stock that's been in a downtrend and you see a long red candle. That's the bears doing their thing. Then the next day you get a small, indecisive candle. This could be a Doji, which looks like a plus sign, or just a small body candle. It's like the market is taking a breather, trying to figure out its next move. But then, on the third day, boom, a big green candle emerges, closing well above the midpoint of that first red candle. This, my friends, is the morning star, signaling a potential shift in sentiment from bearish to bullish. Chapter 4. Piercing the darkness. The piercing line pattern. Sometimes the market can throw us a curveball. Just when you think the bears are in complete control, the piercing line pattern emerges, suggesting a potential shift in power. Imagine a stock has been plummeting and you see a long red candle, a classic sign of bearish dominance. But hold on, because the next day a green candle appears, and it's not just any green candle. This one opens lower than the previous day's close, like the bears are still trying to push the price down. However, by the end of the day, the buyers have stepped in with force, driving the price up significantly, closing well above the midpoint of that first red candle. That, my friends, is the piercing line, a sign that the bulls are fighting back and might just win this battle. Chapter 5, Shooting Star, a falling star for bulls. Just like the real shooting stars, this pattern signals a potential shift in the market, but this time it's not in favor of the bulls. Imagine a stock has been on a tear, climbing higher and higher. You see a beautiful uptrend forming. But then at the top of that uptrend, a shooting star appears. This candlestick pattern is a single candle with a small body and a long upper shadow, kind of like a lollipop flipped upside down. That long upper shadow tells a story. It shows that buyers were initially in control, pushing the price up, but then something changed. Sellers stepped in with force, driving the price back down before the day ended. Chapter 6. The bearish engulfing pattern, bears take charge. All right, let's talk about the bearish twin of the bullish engulfing pattern, the bearish engulfing. This pattern is like a dark cloud forming over a sunny market, signaling a potential shift from bullish to bearish sentiment. Imagine a stock has been doing well, climbing higher with a nice green candle. But then, the next day, a big red candle appears, and it doesn't just follow the previous candle, it completely engulfs it, swallowing it whole. This is a clear sign that sellers have taken control and are pushing the price down with force. Chapter 7. Evening Star, the sun sets on the bulls. As the day transitions into night, so too can market sentiment shift from bullish to bearish. The evening star pattern is a 3-candle formation that signals a potential reversal of an uptrend. First, you'll see a long green candle. The bulls are in control, pushing the price higher. Then comes a small, indecisive candle, similar to the morning star pattern. This could be a doji or a small-bodied candle, indicating some hesitation in the market. Finally, the third candle emerges, a long red candle that closes well below the midpoint of that first bullish candle. This is the evening star, confirming the shift in sentiment and suggesting that the bears might be taking over. Chapter 8. Dark cloud cover, shadows over the market. Just like a dark cloud can quickly cover the sun, the dark cloud cover pattern can signal a potential reversal of an uptrend, casting a shadow over the bullish sentiment. Imagine a stock has been rallying and you see a strong green candle. The bulls are clearly in charge. But then, the next day, a red candle appears. And this isn't just any red candle. It opens higher than the previous day's close, like the bulls are still trying to push the price up. However, as the day progresses, the sellers step in with force, driving the price down significantly and closing below the midpoint of that first green candle. This is the dark cloud cover, a bearish reversal signal that suggests the sellers have gained control and might push the price lower. Chapter 9. Doji, the market's moment of indecision. Sometimes the market can't seem to make up its mind, and that's where the Doji candlestick pattern comes in. This little pattern is like the market hitting the pause button, taking a moment to catch its breath before deciding its next move. Picture this. You've got a stock that's been moving either up or down, and then you see a candle with a tiny body. So small that the open and close prices are almost the same, and long shadows extending on both sides. That, my friends, is a doji. It's like the market is saying, hold on, I need to think about this. Now, a doji on its own doesn't tell us much. It's like a coin toss. It could go either way. Chapter 10. Spinning top the market's balancing act. The market is like a constant tug-of-war between buyers and sellers, and sometimes neither side can gain a clear advantage. That's where the spinning top candlestick pattern comes in. It's like watching the market try to find its balance. Imagine this. You're looking at a stock chart and you see a candle with a small body, just like the doji. But this time the shadows on either side are relatively small as well. It's like the candle is spinning in place, unable to decide whether to go up or down. This tells us that the buyers and sellers are equally matched, creating a sense of indecision in the market. Chapter 11. Inside Bar. A moment of consolidation. In the fast-paced world of trading, even the market needs to take a breather sometimes. The inside bar pattern is like a moment of consolidation, where the market pauses to gather its strength before making its next move. Imagine this. You're looking at a stock chart and you see 2 candles, one after the other. The second candle is completely engulfed by the range of the first candle. It's like a smaller candle nestled inside a larger one. That, my friends, is an inside bar. It tells us that the trading range has narrowed and the market is taking a moment to digest recent price action. Chapter 12. Rising 3 Methods, Bulls. Stay in control. Even in an uptrend, there are bound to be some bumps along the way. The Rising 3 Methods pattern is a bullish continuation pattern that shows us how buyers can maintain control even when facing temporary selling pressure. Imagine this. You're looking at a stock chart and you see a strong uptrend in progress. First, you'll see a long bullish candle, a clear sign that buyers are in charge. Then, over the next 3 candles, the price retraces slightly, forming 3 smaller bearish candles within the range of the first bullish candle. It might seem like the bulls are losing their grip, but hold on. The 5th and final candle confirms the bullish continuation, as it's another strong bullish candle that closes above the high of the first candle. And there you have it. Some of the most common and powerful candlestick patterns used by traders around the world. Remember, these patterns are like clues that the market is giving you. They're not foolproof, but they can give you an edge in your trading by helping you anticipate potential reversals and continuations. As you gain more experience and learn to recognize these patterns, you'll be able to make more informed trading decisions and navigate the markets with greater confidence.